20 minutes in. We're 20 minutes in. Price has created. The buys are right here. Look at this. The buys are here, but it's a counter trend trade. So we're not going to take the buys because that's ridiculous. But let me draw it out for you. We're on a 5-minute time frame. If you can't see it on the 5-minute time frame, zoom in and look again. Ready? Inducement, BOS, right? Inducement, BOS. Price created a higher high and a higher low. Okay. This is your next BOS zone. Technically, this is your BOS zone, but if once price breaks above this, it's another confirmation that buyers are in control. Price then came back, failed to create the lower low. Step 2. Failed to create the lower low, giving us our stop loss position. Did create equal lows, which means liquidity, right? Once again, failed to create the lower low. Pushed, inducement, push. BOS confirmation. BOS confirmation. Buyers are in control. This is a 5-minute time frame. Pull back into our original BOS. Entry position would have been here. Stop loss would have been here. Take profit would have been at the previous high here, like that. Right? This is a counter trend trade. That's why we didn't take this. I pointed this out right when we got on the Zoom here. And if you don't believe me, watch the recording when I post it. But we pointed this out right away, right when we got in here. Why didn't we take this? This is the exact reason why I closed out my trade, because I saw this setup happening. I'm not going to take the counter trend buys because it's counter trend. I don't want to trade against the trend, right? And once again, let me delete all these drawings here. Remember, this is the 5-minute confirmation. Let's go to the 3-minute confirmation. Once again, let me draw it for you. BOS. Inducement. First leg confirmation on the BOS. Buyers are in control. Now we have the 5-minute. Confirmed. Full setup on the 5-minute. 3-minute. Let's watch the 3-minute grow for us. Pullback. Failed to create the lower low. Now, one thing to keep in mind. Price actually went bearish. Price went bearish. How? Inducement, BOS. Okay. Once again, inducement, BOS. Higher high, higher low. Price broke, creating this a BOS, creating a lower high and a lower low. But overall, the trend is bullish because this is your external high. This is your external low. Once again, let me redraw it. Let me just do the full setup, okay? We're going to do BOS here, bearish BOS, or bullish BOS, my apologies. Bullish BOS is right here. All right, we have our inducement. Inducement, right? We have our inducement. We have our first leg push here. First leg, right? Then we have our inducement here. Price then creates our bearish BOS. Bearish BOS on a lower time frame, but you got to keep in mind that this right here is your external high. This is your external low. Inside of structure. Inside of structure. Where you got to think, remember, the trend is bearish. The trend is bearish. So this is just, if we're just looking at this, we're watching price flip, right? We're just watching price flip on this lower time frame. Technically, this is your external high. This is your external low. This is your internal high. And this is your internal low, right? That is technically what that is. But we're looking just on the zoomed in structure here. So this is your external high right there. This is your external low right there, right? This is your internal high. This is your internal low at the BOS. Higher high, higher low. And if you see, price created a BOS here higher high, higher low, higher high, higher low. Okay. Price then broke below, creating a inducement in a BOS. Lower high, lower low, lower high, lower low. Okay. Every mark, grab your, if you don't know how to do it, grab your snake head, find the first bend. Boom. The second bend is your previous structure point. Okay. Now price broke below, which then gave us our one leg pullback, confirmed into our inducement, failing to create the lower low. Failing to create the lower low, creating our area of interest, creating our box, creating our zone, creating our structure point. We know that anything below this gray box is bearish. At this point, we know anything below this box is bearish and the setup has failed. Anything below this box, you do not want to be in the buys because you're wrong. We know that now because price failed to create the lower low. You don't want nothing to do with buys if you break this box. That's why your stop loss goes there. Okay. Now go back into the plan. Step 3 or step 4, whatever step we're on, we're looking for the next. Let's get rid of this external high and make it our bullish BOS. We're waiting for our next leg to break. Boom. Price has broke that leg, confirming our 2-leg protocol. Price has confirmed that we are bullish, right? Now, all we need is the pullback into our original BOS to grab our entry signal. Now, as you can see, once again, price broke above, creating what we call inducement on a bullish BOS on our 1-leg, pullback, 2-leg. Now, all we need to see is the bearish pullback. Boom, bearish pullback. At this point, we have our 3-minute and 5-minute completely aligned. Completely aligned. Now, we had to go down to the 1 minute to confirm, right? Once again, our entry would have been here to here. Anything below this gray box is bearish. So that's why your stop loss goes there. Now, do you want to go to the candlesticks or candle wicks or candlesticks here? Or do you want to play it safe, go below the area of interest and go to the candle wicks? Now, you may ask, why is your box only that big? Well, because if you look here, this wick goes to here and this wick goes to here. I'm not interested in these external lows. Now, if you wanted to play it safe, which is what you guys probably do, is cover those external lows because, or not external lows, those equal lows. You can see this low and this low are equal. We got too much shit on our screen, so you can't see it. See the green line right there? Equal lows. That is liquidity. Price is targeted to that liquidity. Just know that. That is a sign of liquidity. But also, we also know that anything below that line is bearish, and we don't want nothing to do with it. That's why our stop loss is there. So, once again, price pulled back. That's your entry right here. Price into our original BOS. This is our original BOS. We know that anything around this zone is an entry. Now, what becomes scary is price actually went bearish, right? Price actually went bearish. That is why we wait for a 1-minute entry signal, right? We have a bearish engulfing candle, which means that this is your inducement. This is your bearish BOS because why? Price created, this is your lower high, this is your lower low, BOS push. We know that we need to see a break above this BOS. Price did not confirm the first push, creating a lower low action and a higher high. But we know ultimately this is our push. This one push here is our bullish push. But on technicals, price created a lower high and then created a higher high. Price then pulled back, created a BOS with an inducement and went bearish, right? That's why it's important to look at your lower time frame. Now we have a 3-minute and 5-minute completely confirmed. Now we need to see an entry signal on our 1-minute time frame, right? Now that we're zoomed in here, you can see all the technicals, all the little bit of movement, price action here, right? On a 3-minute, the BOS is up here. And then you can see where price created a lower high and a lower low, had had a BOS, one leg, pull back, two leg, pull back, right above our area of interest, and kind of ugly. You can see all those small movements now on a 1 minute time frame. The fact that this had such a negative pullback is what would have thrown us away, because we want to see on the lower time frame price go bullish. On a 1 minute, remember, we're not going to zoom back all the way over here because this doesn't matter. We already have it all drawn out. We're looking, I'm going to get rid of this. I'm going to get rid of this box, and I'm going to clean up my area where we're looking for an entry signal, okay? So we just can zoom in there. See you later, Dallas. So at this point, we need to see price go bullish, right? Remember, this is our bearish inducement, right? We need to see price go above this line here to say on the 1 minute to confirm bullish for added security. Why? Because it's added security. We're putting money on the line. You don't want to just freaking throw money out in the window, right? You want to make sure and confirm entry signal. Now, this is an ugly setup. It's a beautiful setup on the 3 minute and 5 minute. But if you're looking at a 1 minute entry, sniper entry to confirm the tightest stop loss, everything that you want, you need to wait for this 1 minute to go bullish, because the 1 minute leads the time frames. You got to think, if the 1 minute's bearish, there's a chance that the 3 minute goes bearish. There's a chance that the 5 minute goes bearish, and so on. So once you confirm that the 1 minute goes bullish, once again, price then has the red pullback, the bullish push, right? No, did it go bullish here? No, it did not. Then I had a pullback, and then it went bullish, right? Oh God, let me freaking grab this thing here, make it red, green, and then it went bullish. Okay. At that point, this setup is ugly, and we are no longer interested because of this candle here, because the lower high and the lower low are so far apart that it pulls us so far away from our entry on a 1 minute that you can't take a 1 minute entry. You can't take a 1 minute entry, because what you want to see is, let's say we're going to draw from here to here. This is what you want to see. Price comes down and have structure to the downside, right? Small structure. And then as soon as it hits our original BOS, as soon as you want to see the rejection like this, which then creates our, once again, our 1 minute inducement to our 1 minute bullish BOS. And at this point, the 1 minute goes back bullish. And then you just wait for you can either take it as soon as that candle closes. As soon as this candle closes and it shows indication that buyers are in control, or you can wait patiently for the little bit of a pullback that it might have to then have the continuation. That is our entry signal. We need to have our 1 minute, 3 minutes, 5 minutes all confirmed in a line, and then we need to see price go back bullish to and on the 1 minute time frame. This little bit right here is going to win trades, or it's going to lose you trades. If you don't wait for this confirmation right here, there's a chance that price does not even confirm. And now this is where SMTs come in fine too, because there's a chance that if you don't look, there is an SMT zone sitting right here where price could come in. And that's why trading's risky. Trading's not a get-rich-quick scheme. Trading is hard. Trading is risky. And the only way to get good at trading is to be in the market and attacking the market consistently at all the times, because there's a chance that price comes up here, gives you everything that you want to see, everything to a T, A plus, 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 whatever. And then has this move here, comes back, hits our SMT zone, rejects, fakes you out, consolidates, and then continuation to the downside again, right? Or instead of that continuation, it freaking breaks out, retests the top, confirms there's an area of interest, confirm that it's using it now as support, and then has the continuation to the upside. Now, once again, I didn't take the buys on this. Why? Because one, we're in a trend continuation. This was a high risk setup. Price is actually bearish overall. Now, once we zoom into the 1 minute, we can also confirm exactly why we did not take the buys here, because look how ugly that is. You don't want to buy into that. You would have been sitting here. Let me get rid of this drawing here. You could be sitting here at this point here, probably somewhere around there. You probably wouldn't have gotten a perfect entry because no one does. Probably would have got in here after spreads and all that shit. Your stop loss would have been way down here or right here, potentially there at that point, just to say whatever. And your take profit for your 1 to 3 would have been way up here, right? Because you know that this is imbalance, you know price is targeting, and you want to fill this imbalance, and that's the high. That's a beautiful trade right there. That stop loss to that take profit, right? That's the previous high on your external high and your external low on your internal high and your internal low, right? External high up here, external low down here, internal high here, internal low here, right? That is the external high. That is the indication complete, that is the indication to pull back. This is the push to this is the completion at the all time at the high here on a 1 minute time frame. Now, if you did take this, this is what you're looking at. This 1 minute dictates everything. Dictates everything. You could see price came all the way up here, and you actually went all the way up to a one to almost a 1 to 2. At this point, your break even point probably would have been here. You probably would have gone to break even at this point here, right? And now you're sitting here, and you would have gotten wicked out right there. That first push pullback right there, you've been wicked out, and you've been like, dang, why did I go to break even? Well, your freaking entry was ugly in the first place, so this push was even lucky in the first place. What you should have done if you're going to take this is taking it and then freaking cut your stop loss very low right below this structure, and then just take profit at this point here. Right? If you're going to take an ugly setup right there, your take profit should be that next high automatically. You should take a 1 to 1. You should be happy with your 1 to 1. Because there's no way you're going to get a full blown push out of an ugly setup like that. I mean, there's a 50-50 chance, but it's an ugly setup. That huge embarrassing engulfing candle is not an entry signal. 3 minute, 5 minute, and everything was aligned until it came down to the very most important part, your entry signal. And if you fail your entry signal, you're wrong. And once again, proven point. Follow the plan, follow the steps, and this will prevent you from this emotional distress, emotional damage happening. Now clean your screen because you don't need all this crap on your screen. Did that make sense, guys? That was a full breakdown, step by step, all the way from the 5. That's our full entry right there. Everything was there. I will upload this recording so you can watch this multiple times to understand it. But that was everything you need to know, all the way down to a failed 1 minute entry signal. If your entry looks like this, if everything 3-5 and everything's aligned, and you see this freaking shit happen, and you take it, Godspeed, brother. Godspeed, because your 1 minute is freaking bearish. You need to see your 1 minute go bullish first. How are you gonna have a push how are you gonna have a bullish push if your 1 minute's bearish? You got to think it starts somewhere.